Evening, everybody. It is 5:55 on this Wednesday afternoon, and it was a pretty ugly day here. So let me get right to it. This is your closing comment for Wednesday, the 18th, and it is video number 1949. Okay, um, this is, you're going to hear a lot of excuses for what happened today. But the facts are really, really clear, and we've been discussing them here for over a year. We have spent ourselves into a hole. And not only is that true, but it's also a very negative circular situation in that supply and demand plays the biggest role in the bond market when you have massive issuance. We've been talking about the amount of issuance to cover the ridiculous deficit spending that is still going on. And I'm not going to argue that we didn't need a big piece of it with COVID and the economy shut down. Clearly, we did. But now it's time to pay. And so, as rates move higher, because the auctions are not being met with anywhere near the kind of demand that is needed, causes rates to go higher. We had another 20-year auction today. And to give you an idea of how that went from the standpoint of interest rates, um, the just 2-year note is 522. However, the 10-year note is 490. I mean, these are high rates. So why do I say it's a very circular situation? It's really simple. The higher the rates go, the more expensive it gets to cover these debts. Forgetting about making payments on it. This is like when you buy a house and you get a 30-year mortgage, and the first 5 years all you're paying is interest. That's all we're paying. We're paying interest. And as that number gets bigger and bigger, it just gets worse and worse. So today's action was particularly ugly. 9 of 11 of the S&P sectors were down, and 4 of them were down over 2%. The other part of this wonderful market that we're in is the fact that the market internals continue to weaken. I talked about it yesterday. I talked about it the day before. I've talked about it on up days, and I've talked about it on down days. The bottom line here is that until there's volume on up days and until the market broadens out instead of, you know, 7 or 8 or 10 or 20 stocks running the market in one direction or the other, it's not getting better. Today, with the Dow down 332, and by the way, that was the best performer, advanced declines were 5 to 1 to the downside. The NASDAQ, which was down 219 and was still not the worst performer, down 1.62%. Advanced declines were 3 to 1 to the downside. All of these fantastic, magnificent earnings beats that you keep hearing about, they're bullshit. Um, Morgan Stanley had earnings And here's what happened. This morning, after they came, the stock was 78 and it was down $2.34. At the close today, it was 74.88, down 5.45 or 6.75%. All it did was get worse and worse and worse. And the UAL, which this morning, well, they had the earnings yesterday for UAL, and the stock was actually up pre-market. It By the time the market opened, it was 38.35, which was down $1.15. At the close yesterday, it was 37.94, down 2.18, and today it continued further, 36.24, down 3.88, almost 10%. We had the JBHT, JB Hunt numbers. That one was true. It was already down 4% by this morning's open. But that 4% in JB Hunt was only about $8. It finished down 17.34. So, these things are not bouncing back. Today we had earnings. Las Vegas Sands beat, and the stock is it closed 44.60, down 72 cents. The earnings came after the close. It immediately went up almost $3, 47 and a half. Last is 46.87, up $1.55 or 3%. And that brings us to the two big names for today. And what's surprising here is that one of them is doing absolutely nothing, and that would be Tesla. Tesla had a miss. However, the stock had closed at 242.68, and that was down $12.17, um, which is not unusual for Tesla ahead of an earnings call. Um, in the post market, it's currently trading 236.80, which is down 18 or 7%. So that has really accelerated as some of the internal numbers came out in the call. However, their margins actually improved. They reaffirmed um, their guidance for the number of cars that are going to be delivered. And by the way, November 30th, there is an event. They are going to start delivering the Cybertruck. Let's remember, light trucks are the biggest piece of what gets sold in the US. And Ford, GM, and Stellantis, they're not making any. They're certainly not making any electric ones. So there's the upside there. Also, the charging stations, the charging network that is being built out with Tesla's standard as what's going to be used, that's also going to give it a huge boost because it's most likely going to be a subscription model. So Rivian owners are going to pay $10 to $15 a month to have access to it. I mean, those are things that really are going to help. Okay, let's get to Netflix, because Netflix was a beat. It was in line pretty much for revenues. The stock had closed at 346.18. That was down 9.54. As soon as that news came out, the stock went as high as 392. So $46 up. Um, right now, it's trading 388.55, and that is well, I take it back. It's trading 389, up $33.35, or roughly 9%. So that one's acting really well. Okay, tomorrow we have claims at 8:30, as well as Philly Fed. At 10 o'clock we have existing home sales and leading indicators. So those are pretty big, but there's nothing that's going to be bigger than what's going on in Israel. One of the conferences, or one of the meetings, was canceled today due to the issue of the bombing of that hospital. And so that was canceled. The senile guy who we use as a puppet president, he's going to speak tomorrow evening, I guess. Um, and so we'll have to see. But judging by the chart on the screen, which is the gold, I'm going to guess that they're about to start the ground offensive, and that's going to be uh, pretty ugly. We'll have to see who comes in on the side of Hamas, how active some of these behind the scenes sneaky bastards who finance them, what they say and how it works out. So the chart on the screen is the gold, and I will remind you, we got long here. Our options went worthless here. They climb back up. They expire on Friday. And so far, what we did was we sold half of the position. We had an average price of $1.19 on these calls. They're GDXs, which are miners, not the actual price of gold. And we got $1.08 for those today. So they went from $1.37 where we first bought them, down to that 85 cents where we added 50% more to lower and lowered the cost to $1.19. And today we sold some for $1.08. So a hell of a return, really great. But let me give you a better look at this. You can see we're right on the downtrend line, but we did regain all of the moving averages: the 5, the 20, the 50, the 100, and the 200, which really surprised me. I really didn't expect this to be this extreme a move today. And we also broke the downtrend line. But what is more important here is that the thesis that I put forth several weeks ago, actually almost 2 months ago, was the distance that we traveled to the downside on this move versus the last two tops. This is a weekly chart. I'm going to go out 4 years so you can see it. On the first top, up here at 2085, or 2000, let me see, 2089, we fell back to an ultimate low with a test right here of 416 points. We then rallied up to a slightly lower high here at 1,078, and then we went down 460 points. I don't need to give you the numbers. It's pretty obvious to see that after making this higher than this high, but lower than the all time high, we only went down and touched the rising 200-week moving average. That move was 260 points roughly. So only about 50 to 60% of either of the other two moves. And now we're moving to the upside. I really don't expect to see us blast right through here, this 25 or so. I wouldn't be surprised to see it come in a little, but take a look at what the MACD looks like. We're actually still down here, not oversold, but certainly not overbought and turning to the upside. Let me pull this out a little just so we can see what those lines really look like. Yeah, we're still not crossed over, but if we do, uh, I think we're going higher, and we'll have to roll that position forward in order to take advantage of it. Oil was up again today. It was up as much as about $3.50, closed up. Well, it's reopening at right now as we speak, 87.22. We closed today 87.27, and that was up $1.83, and crude inventory showed a drawdown of 4.49 million barrels versus last week's build of 10.2 million barrels. So, we had the nice rally. Let's give you a little bit more chart to look at. We had the nice rally. We have this rounding bottom. We came back into the point of, the support again down here, a little over $80. And so far we have 1 week really of higher highs, higher lows. As far as it relates to the daily chart, let's take a look at that. We have fairly consistently been in the pattern of higher highs, higher lows. We had a little bit of a flag here. We gapped up today. And, this could easily be $90 to $92 straight away. And again, MACD, certainly not overbought. Um, hasn't crossed back to the upside, but as far as the shorter term moving averages, the 5 day has already gone. I mentioned this morning through the 50. It's headed to the 20. Um, you know, very bullish. All right, folks. I'll be back first thing in the morning with the claims and the Philly Fed.